verse, no words sound perfect. Play the game every day, then rehearse it. Hey, what's the next move? Hit chat for side news. Don't care about next door. I'm in my own lane.
Well, ladies and gentlemen, it looks like we got our surprise. The market ripped today. We got a huge gap up, a huge rally. Markets went up. It closed only 372 on the down, but we were up as much as 470 points today. So I got your watch list coming into September 6, 2019, and it's going to be very exciting here. I hope you guys are ready. We have a Friday, so this is going to open up the door for option strategy. We're going to talk about managing these credit spreads and rolling them over because we lost on some, we won on some today. Very interesting outcomes with a lot of those. Got your keys for tomorrow and the plays we made today and what we're going to be looking at tomorrow. So let's get right into it. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. We post a nightly watch list every single night on this channel. And make sure we see you there live in the morning. We are trading live, open till close, Monday through Friday, 30 minutes before open. It is the first link in the description, first link pinned in the comments. We better see you there, and you better do the most important thing. You need to post your watch list below. Let us know what you're looking at. Let us know what you're playing tomorrow, and get your head in the game. So let's get into it. Right off the bat with the keys, again, we did see the trade talks got resumed. That is what caused this gap up. We were saying yesterday, if not, I encourage you, go watch the video from yesterday. Said it, to break above this 294, we were going to need a surprise. We were going to need something big, and this news that China is sending delegates to Washington to restart trade talks for October. That is huge. Now, we've seen this before. It doesn't mean, I don't care if you think it's fake, planned, conspiracy, yada, yada, binga, bang, boomba, boomba, boomba. Whatever you think it is, it doesn't matter. It's enough. And this is a big move, last 3 days. So how tomorrow plays out on Friday is going to be important. But the main key is what to look for. Now, there's a few things. There's one, looking at this in the midterm, or even, and again, the midterm to long term, because we have the Fed coming up in mid-September. We're still going to be setting up plays. There was bond movements today, but also what we're going to be looking at tomorrow now. So tomorrow, Surprise Friday is still in play. Remember, every single Friday of August, about 75% of the Fridays, 3 out of 4 weeks, led to some big news event that caused a retraction. Surprisingly, we did not see the president take any credit for this rally, which is kind of surprising here. But if we do see him say something tomorrow, if there is any news, any updates, and now this is the main thing I want to talk about on the midterm, is the next turning point is how this relates to the Fed. The fact that we are really hovering right below all-time highs. So again, watch for any surpriser, and what I'm going to be looking for, we got the gap up. I was wrong. We didn't get a sell-off there. It kind of chilled a little bit after having the big run-up, and it kind of stayed there. The volume was high, but I think it could have been higher, but it was still definitely double the volume we had yesterday. What I'm going to be looking for is to see, do we set up above 300? Does it pretty much hit another level and then base out and stall coming into next week? Or does this if this momentum keeps going, we could see another pretty big move tomorrow. So tomorrow is either going to be, I think, a really big move and the rally is just going to continue, or we're going to get a move up or down and then a cuck and nothing, and that's it. But this sets up a great opportunity for options. You guys really have to keep that in mind. Push it to the wall. If some of these contracts start losing their value and we could get contracts for cheap and get in the money, and then volatility comes and moves the underlying assets a few dollars, you get in the money. Oh man, it's awesome. And if you guys haven't, it's the main video on the channel, how to predict the 1000% options. Everything I just said will make a lot more sense. Go find it, push it to the wall. If you don't know what that means, search push it to the wall, the trading fraternity, you'll see it. But that's what we're going to talk about, because I still need to show you rolling it over now. But in general, the Surprise Friday is still in effect. So again, surprise to bring us up or down still. I'm going to be looking for that, and a surprise to bring us even to levels right below all-time highs. So watch out for that. But like I'm saying here with the Fed, the issue coming forth, and this is something that could surprise, whether it's this week, wrapping up this week, or it's even coming in the next week or the next few weeks, is how does the Fed interpret this? If we are at all-time highs like we were last time, if now that there is a trade deal, is this going to throw a wrench now in the Fed rate cuts? Because now the market is pricing 100% odds of a rate cut. You got certainty now with the trade deal, even though it's uncertain, but it's positive, and that's the dilemma here. The Fed may still view this as uncertain trade, but the market is really, really hyped up on it, and they're viewing it as positive. Think about what I just said right there, and think about that interaction now. There's going to be an effect. When that effect occurs, I don't know. We have to watch for it. That's what we're going to be observing here. So watch out for that. That's what I'm expecting. But again, if it does, seeing some of these past rallies, if up until the Fed, if it could get through the issues there with the Fed, we just bought ourselves a lot of time. We pretty much bought us up until October, maybe mid-October, November of an interesting type of market. And you'll see here, this market has been interesting. If it does repeat something like this, I wouldn't be surprised to see this. Big rallies up, stall for a few days, maybe gap, stall, and then it'll pretty much just stay and oscillate in a range, kind of slowly going up. So selling credit spreads is going to be very, very effective in this environment. So I hope you guys are ready for this. So now let me get this out of the way so you guys could do it. Let's talk about the plays, because again, I made a few plays today and I want to show you how I'm going to handle plays, because remember, I told you, I said we're going to get clapped if there is a surprise, and we did. We sold at 296, bought at 298. We're kind of there in that awkward middle. So let me show you guys what I'm going to do with that play here. So this is what I want you guys to see, because a lot of these credit spreads, again, short term, some of these are expiring. Oh, this is actually, I thought this was expiring on tomorrow, but this expires Friday. But even then, even if this is it did expire tomorrow, we had it with Walmart, and we closed out one of these Walmarts. And if you guys remember, this was that play, the 117, 119. And if you look at it in the morning, Walmart, that contract was $1 almost in the money, and we were down on it. We sold it for 18 cents. It was trading at 60 cents, and by the end of the day, I closed out that play with an 80% profit. This is the whole point with selling premium. Use it to your advantage. You already have it in your advantage, so I don't care if it's going against you. You may be losing. Again, here's the example right here. You could see I'm down $88. We sold this for 40. It's now going for 132. Oh my gosh, I'm such a bad trader. What do I do? Oh my gosh, I panic. I gotta stop loss, cut losses. It's gonna get bad.
No, I need to talk to a manager. You said it's a credit spread, and it looks like I'm not making money. Does this guy even post his plays?
So this is what I want you guys to do. And honestly, this is gonna sound crazy. After I showed people this live, they were tripping out because like, can't you just keep doing this? This is the point with the credit spread. When you're selling premium, the odds are in your favor. If you're down like this, this is what if this did expire tomorrow, I would do this tomorrow. But since it expires Monday, I'm going to keep holding this, and come the day of expiration, I'm going to do this. So again, if you have contracts that you sold, not contracts, but a credit spread, and you're down on it, come to do it like this. You see, view all options. Here's those September 9ths. As you see, we're +1 here, and then we sold this one. So what do? You buy this back, you sell the +1. So this is closing out the position, 2 option order, but then you keep it going, go to next week. That's the September 13th, and go to the exact same play. So sell the 296, buy the 298, and again, you see we're closing that trade, and then we're buying it. Now look, earlier, this was going to be, it could be a debit or a credit. It depends on the prices, and it depends when you get filled. Honestly, it's saying here, $0 to $20, you may need to switch it to a debit. Even if you did sometimes now, when it was against us this morning, when the stock was at 298, the SPY was at 298.70, it would have been a $5 debit. So I pretty much, it would have cost me $5 to stay in this play. So I would have sold out of this play. So now instead of, because again, if it expired, this is what I want you guys to realize. If the play comes to expiration and you're down, like again, we sold at 298, it's above 298. The difference is $2. I collected $40. I would, if I close out this trade, I take a $150 loss. Boom, the play's done. When you're selling premium, it's in your advantage. You don't need to take the loss. Again, this is the risk. You guys will hopefully, by showing this, you could understand how there is drawbacks to this. But depending on how much you collected and how you could play this, you could pretty much buy yourself more time until you win. Because again, the minute it closes below 296 on expiration, we'll make the money back. So in this case, if I did this play, I would get a credit of $2. So I would close out of the old play. Yeah, I would have taken the $100 loss, but then again, I'm selling this for another $138 credit. At the end of the day, even after taking the loss here, I'm walking away with a total credit of $2. So I'm actually getting paid to stay in the position. And then now, even though it's at, let's say it closes at 296, 297 tomorrow, I would have lost on the original one. Come Monday, the market gaps down, closes at 294, or ends up there by the end of the next week, I would actually make my credit back. So simple as that. And this is what I wanted to have you guys see on any of these plays. That's what I'm going to be doing. So there's that. I sold another play. We're already up on this. I was going to day trade it. It was a trade we made later in the day. I'm going to close out of this tomorrow. We're already up 50% depending on how it is, but I sold a 50-50 call and bought a 51-50. Credit spread was only $25, but we're already up 50% on it. That was one of the plays we made there yesterday. I closed out the Walmart, and again, on these spreads, this is something we've noticed even last week. If you're on Robinhood or in general, usually weekly, this one had a bid of 0. So sometimes if you're in a spread, like take a look, going back to this Intel, sure, if I'm in the spread, remember there's 2 contracts, but at one point, it's not letting me see the weekly, but at one point, the contracts that you're in, you could just go to the option chain and just close out the side that you're negative on, and you could keep the other one. And that's what I did. So instead of trying to get filled on this other Walmart, I just bought back the negative side for $5. Kept this one. If this pops up in the morning, maybe we'll make money. But either way, not too bad. We did that. We did a play on Lululemon. They had earnings. It was $8. We did the calculation on our play saying it was like a 24% move or 28% move to make 1,000%. Lululemon did good. I got the put side. I think it was all over the place, but the max risk on the other one was $150. I've already collected $120 by selling that other play. So if it does keep going up, we will take some more losses. But again, now you guys see my strategy will just be to roll these over pretty much until we could get an opportunity to win. Watch those. I think those are still going to be good. I also am in those McDonald's we got yesterday. Those actually slightly appreciated. I think they stayed the same price. If we can't make a day trade on these in the morning, I'm going to watch those. But watch in general too. The fact that the markets went up so much, McDonald's is holding there. We're still in that other play from yesterday. I'm going to watch this to be a play to develop, and I really like that. We made the Intel as well, and then these are the ones I said to watch. Intel dropped. I'm going to cover out of that play, but now Nvidia and FedEx. If you guys remember, I brought both of these up. They went good. The fact that it pretty much closed right at 179, 180, watch how this moves. That's going to be a very, very crucial level for Nvidia. So it could keep up here, and remember, I said the minute breaks around here. Watch what it does here. This could start to set a new trend. Don't forget, Nvidia, before Roku and Shopify started ripping, that stock was Nvidia, baby. So I really like Nvidia. I want to see how it is. I identified contracts this morning. They went up a lot. We missed out on them. The IV held up. They were very, very cheap in the morning, but it started going up, and they clearly outpaced. Same thing even here with FedEx. They went up, and they went up very, very good, and they stayed up. They had a random drop there through the day, but I'm going to be watching these. These could be good stocks for Friday, tomorrow to play on the expiration. But again, we've seen these situations. Even if tomorrow is a cuck, it doesn't mean we won't see any activity coming into next week. So however that plays out, that could set up some other good opportunities for next week. So we're going to be looking at those on the pricing. These plays we already got, but these are the ones I'm going to eyeball. Next is Home Depot. And if you guys remember, that credit spread we took in the beginning of this week, I held another one of those. That one's actually down like 5% now because, look, it's in the money. So Home Depot kept coming back up. So the fact that Home Depot had this bounce again, looking at McDonald's, if Home Depot starts to rip up here and goes back on this tear, do not underestimate what it did the other week. So again, these contracts are still holding them. The fact that those are in the money and I'm still only down like 5-10%, that's saying that these contracts are really, really cheap. The ones further out the money. So again, you got to finesse it, but be careful there. I'm going to be liking those. I'm going to be watching those for sure. Next is Boeing. This one was an interesting one all day today. It outpaced the market, came down. It had different things, but I'm still in the same boat as Boeing. But now the thing is, Boeing, you could see the market had this crazy run up, but Boeing did a lot better when the market was doing worse. So the fact that the market's kind of performing, this is letting you know how people, Boeing investors and all investors are kind of viewing it. So watch Boeing even there for maybe weakness or even the potential to start running up if it has been lagging. So keep your eye on that. Then there's going to be Lulu. Here's Lulu's earnings. You saw it went up, came down, but it's holding up. They had forward guidance, great growth in China. I like them. That could be a continuation play. We have seen that happen on Fridays with Lulu, and it has gone crazy. So depending on the prices, those could be good. And again, the push it to the wall strategy right off the morning on some of these big earnings plays, depending on how deep the chain went. And I think Lulu's chain went pretty deep. There could be some good plays. So watch out for that. And even the resistance point here at 200, people might really like that. But watch that. Then lastly, there is Zoom and Crowd. So I don't know what the earnings was on here. I didn't have a chance to look at them, but both Zoom and Crowd both dropped. I want to see what Crowd does. I like Crowd a lot more. It's down 8%, but Zoom is down 7 or 3 right here. But watch how both of these play out. Again, why these are both the IPO stocks. So how these start to play out, I think will be very, very interesting and helpful. Then there's Anthem and the healthcare. The spread I have is surprisingly my October spreads are still up. So I think this is saying something, and someone even asked what I think about it. The fact is, regardless of what's happening, you could even see the volume here. And again, it kind of does that on some of these days. It gets a lot of volume before even bouncing up here. But the fact that it was a really positive day and Anthem and even UNH sold off as they did. UNH not as bad, but I think this is something to pay attention to and watch. So keep your eye out for that. Then lastly, here are the more riskier stocks on this chart as always. Roku. That spread we had was up today. It kind of broke even. I think it just has a big spread, but I think we were pretty much up on it. And people were surprised. Remember, I said my break even was 164. They're at 166. They were at 170 this morning. Came down. So big movement still. Again, and you get to see how they move with the market, and again, this push and pull. So I think that wide range is good. I still like that play. We're still going to be holding on to that. So keep your eye out for Roku, but more importantly now, Shop. I'm really, really adamant about this. It ended up lower. It was a weird move today, but wait for Shop's turn. Again, see what the market does. See what the market does, because however the market starts to play out here, Shop is waiting for its opportunity. So if the market goes down, it's probably going to be a better opportunity, because as you see here, when the market goes up, people don't really like Shopify as much. It doesn't do what it obviously does on those days. Like when the market comes down, it'll actually rip. So keep your eye out for that. That's going to be the next big one. And then my favorite, if you remember, I said if it moves 5 or 6% is what I said. It did 4% in the sell-off here at close. I might say that's good enough for me. Watch out. It's selling off again. These are these IPO growth stocks that you get when the market goes up and you see what these companies do, even like McDonald's, even like Boeing. This is very important, and this is a huge signal. So beyond, we might get ready to set up, and I might set up for that play next week. I think it's going to be interesting. So keep your eyes out on that. Call it out if you see it, and that is your watch list, ladies and gentlemen. You know what you need to do. Make sure you show some love. Make sure you're ready to go get some rest, get some hydration. Be positive, be respectful, keep your head in the game, understand the credit spreads, understand the trading, the options, know how to roll over now. Don't panic, be good. We got a week, and then another week after that, another week after that, another week after that, another week after that. Now, this is a recommendation for advice. Options trading is extremely adverse. Please consult with a financial professional before making any trade. You can lose all, if not most, of your financial investment. The Colt loves you, baby. Let's go!